2, 1. We are live. Hello and welcome to PropTechBuzz, a podcast channel where we talk to PropTech founders, CEOs, and visionaries from the PropTech industry and learn from them insights on building PropTech companies. Today, I'm thrilled to have with me Avinav Nigam, who is the co-founder and CEO with Immo, one of the most popular big prop tech startups in Europe. I do not know if it still qualifies itself to be called a startup. That is always a gray area, but I will let Avi explain that later in the conversation. But Avi has had a phenomenal career. He has had several leadership roles in Procter and Gamble. He was with the VP of Disney and Hotstar. He was a CMO at Cars 24. He has been a founder and an investor in many startups. He's an expert on both B2C and C2B. He has built startups valued at $10 billion. He has experience across various industries. He has dabbled into fintech, re-commerce. I do not know. He'll have to explain what re-commerce means: consumer real estate, cars, and streaming. So I'm very, very excited to have this conversation with Avi. Avi, welcome to PropTechBuzz. How are you doing today?
Amazing. Really glad to be here, Ravi, and thanks for having me. I know we've tried to make this happen for a little while, and I'm really glad we're getting there. Just on a very small note, I think there's so much around prop tech that's happening globally, and I'm so glad that somebody like yourself is able to bring a lot of that news out there, because I know that there's a lot of companies mushrooming. I've heard that it's something that's one of the largest categories that people have tried to disrupt. So I'm really glad to in some small way be a part of that.
Excellent. Thank you. As I said, very, very looking forward to this. I've been waiting for this, and it's all building up to this big day. So, Avi, before we get into the meatier stuff, I briefly touched upon your career trajectory, but very curious because you have held leadership roles in some of these phenomenal companies. Why don't you give us your career trajectory? Was it all planned? Did you actually design the way it is today, or it just happened? It will be good setting for our conversation today.
Very good, of course. No, happy to. So I mean, in short, it wasn't really designed. I think, but very early, I was very clear. I wanted to, work on high impactful stuff. So I actually started my career working with who I believe is one of the most consumer first companies called Procter and Gamble. So I studied in India in a place called IIT in Mumbai. I then moved into Japan. So actually, that was my first job, was in a rural part of Japan, where I was setting up a production plant, literally a production plant, as one out of 200 people who spoke English. So it's really a very challenging situation, and I think in many ways that's kind of been my journey has been about figuring out how to take irrational risk with some kind of rational basis. So that's kind of what my journey has been all about. I actually moved over from engineering to what is called brand management at P&G. So that was the headquarters of Asia was in Japan. So I was running. It's both the business side. You manage the P&L, and you also manage communications and marketing. So that was really, really exciting to learn how to build consumer first kind of businesses, how to scale them up. I launched a few countries, a lot of good learnings, rich learnings from that as well. Then I wanted to kind of go, and after almost a decade doing that, I wanted to go and build something myself, right? So I built the first a plant-based meats company, food tech company, which we call Zaza. We had a venture backing. We had a group of 50 very motivated individuals trying to with an R&D facility trying to create plant-based meats and plant-based foods.
When was this? When was this? Because this is huge in the last couple of years. Were you ahead of time? When was this? I'm very curious to know.
So this was ahead of its time. 100%. You've hit the nail on the head. So we were doing this in 2012, 13, and so on. So earlier then the trend actually became big. And I think part of the biggest learning for me there was product market fit. Is actually, I think you learn most from the failures than you do with successes, my opinion. So I learned a lot about, you can have the most amazing product, the best team, the most motivated investors. You can have fantastic customers that love you. But if the market is not ready for mass adoption, if you cannot go beyond the 0.5%, 1% of the market, you're really setting yourself up for learning. Huh? Let's call it learning, not failure. So that was
Nice.
great. So I think post that, I ended up taking on a couple of roles. I was in PayU, which is a fintech, one of the largest fintechs in Asia. They roughly have like $150 billion of transaction volume. As the CMO there, as building the entire supply side for them. So that was very, very interesting. I then built another company with a couple of very strong founders as part of the early team, the founding team as the CMO, called Cars 24. So the company is actually around and doing quite well still. We basically are a used car platform for buying and selling cars, pretty much in the physical sense. You'd have actually retail stores. You can drive the car to the store. An inspector comes with an app, puts in a few details, you get a price, you sell it pretty much immediately, and so on. So it's a very interesting product. Started from India, then we scaled it globally. We're in Australia, Middle East, Southeast Asia, and so on. So roughly worth 3.5 billion in valuation. So that was a C2B model, right? So it's a consumer to business. We're buying cars from consumers. The big learning there for me was, and I always take career in the form of learning, so that's why I'm kind of touching upon it. The big learning for me was how to build, how to run an asset heavy operation at scale using technology. How do you minimize resources? How do you do hyperscaling? How do you build a 10x consumer experience? Because that typically tends to be the biggest difference. So really, really rich learnings on scaling that company. And nobody can actually teach you. We're talking about it in a podcast, and of course, people will listen to it, and maybe they pick up something. But the reality is, when it comes to actually going through that journey of 10x and 100x, like the only way to learn is actually to do it. So I often tell people, like, we're talking, but like the only way you'll actually learn is to go and do it yourself. I then built one of the more recognizable streaming platforms. I was part of the early team at Disney Plus. It's called Hotstar in parts of Asia and India as well. So it has roughly 160 million subscribers now. It's bigger than Netflix. Not many people know that. It's much bigger than Netflix as well. The big learning there for me was how to use product to drive behavior change. Literally seeing people moving from TV into streaming, and I've seen that behavior change happen by incentivizing the right kind of behavior. So that was quite a good learning for me at Disney Plus Hotstar, and also obviously how to do a startup within a large corporate, right? So Disney, obviously a very large company. How do you really get successful in building a business line or a new product line or whatever within large corporate? So that was also pretty interesting. And then finally, that brings me to Immo. That's where we are right now. So obviously we're based out of London, and we kind of moved over here a few years ago to start building this out.
Just curious, were you able to, in your stint with Disney, were you able to meet Bob Iger?
I would have loved to. I did not. He's just come back again. I think
Yes,
he
yes.
left with CEO and he's come back.
I'm, he's
Obviously
a
a big
big he's a
big
big
legend.
inspiration for me, because the kind of tenure that he has had, and somebody who leaves at the what otherwise felt like the end of his career is again asked to come back. That says a lot about somebody's personality. I
I mean,
loved his.
honestly, he's an absolute legend. He's one of those people that I find so inspiring because, as you said exactly, he literally built the company up into this massive business that it is. And at the time where the business started to struggle, they had to go back to get him. And I think he's made some very smart moves in terms of the franchise, in terms of how to really get into digital and how to the digitization of entertainment and so on. And I think I'm really, there's so much to learn from an individual like that. But unfortunately, I don't have the luxury to meet him.
No, I read his book, The Ride of a Lifetime, and I recommend that book to so many people, especially that it tells the human side of him when he's managing such a big enterprise, how can he be human, because he tells about a particular incident that happened, that a child lost his life in one of the Disney parks, and how he managed that crisis when he had to open a new Disneyland in China on the same day. So that was such emotionally, it was just so vulnerable side came out of that story. So very, very fascinating story. Anyways, that was a distraction for me. Immo, so please tell us what made you join Immo as a founder. What was the story of you associating with Immo? How did it all fall into place?
Sure. No, of course. So look, why Immo, or why am I, or why are we building Immo? I think one of the key challenges in the world is, if you think about the Maslow's hierarchy of needs for consumers, so people like you and me and the world over, there are three fundamental needs. There is food, there is clothing, there is shelter. Right, those are the three fundamental needs. In many ways, food and clothing as categories are very solved categories, right? When I say solved, these are customer first experiences. They're digitized. You press a few buttons on your phone and your food gets delivered. You don't like, you give a rating to the restaurant, they're held accountable to their service and the standards. And there's a fairly easy replacement possible. So you don't like a coffee shop, Starbucks, you go to Costa, right? It's very replaceable as category. So brands pretty much have the customer at the center of their entire experience. And I think that's something that, if you think about real estate, is exactly the opposite, right? In many ways, it's the most expensive category out there. So you spend the most amount of money out of your income on rent or mortgage. You also don't have any accountability, right? If you have a problem while living in the property, who do you complain to? I mean, sure, the landlord, but they're not really incentivized to help you. The power dynamic is very broken, so landlords actually have a lot more influence over the experience than the customer does. So it's the exact opposite of most categories out there. And I don't even want to touch upon how completely non-digital the category is. It's completely offline, completely manual. And so I think that was the genesis of it. I mean, we kind of went through a bad renting experience when I had a 3-month-old baby. So me and my family, which actually in London, where we didn't have heating for 2 weeks almost, and no heating, no hot water in early March, which literally was just snowing right a day ago. So very cold timing as well. And we try to complain, we try to find solutions. Didn't really work out, and it was pretty intense, right? We actually had to heat water on the hob for the baby to have a bath, right? So I mean, I'm not saying that this is like not, it's still a first world problem, right? But in many ways, I think there was a fairly large gap in terms of the customer experience, and we had paid all the utilities and we paid the rent upfront, and we didn't get the experience of far from it. So that was the motivation to start it. I think there's a very clear gap in the market. The other interesting, and so what are we building? What is Immo all about? So we essentially are the first full stack, right, asset management platform for residential. So it allows and a professional landlord or a professional owner to acquire, improve, and manage single units, right? Single unit residential at scale. Single unit residential, or residential rather, is the largest asset class on the planet. It's worth some $300 trillion, 2.5 times the GDP of the world. The annual transaction volume itself is 5 trillion, like a massive category, or the largest category, if you will. It also has some of the best return profiles compared to maybe stock market only, so equities. Right after that, it also has the best risk profile. But the challenge is, as I was just describing through my personal pain or personal journey, was that 99% of it literally is managed by non-professional landlords. That's the problem, right? So I think the opportunity here is to be able to create almost a gatekeeper, if you will, or a platform, if you will, that allows the largest of institutions, the institutions or financial players that have are very much aligned to low risk, low income, stable kind of returns, and residential is beautiful for that. So getting those as clients and those as partners on the platform, and then investing into the housing stock to improve the stock so that the quality standards are better, to provide a 21st century, finally a 21st century renting experience for people like you and me. And I think that's really the objective of what Immo is trying to accomplish here.
I really did not. I never saw this way. So you're saying improving the stock so that the quality of the living standards increase, the living experiences would increase. That is, so there is incentive for delivering great experiences.
Exactly, right. So if I'm a professional investor, I would like that the brand that I'm associated with, let's say Immo, is able to create a high quality experience for the customer. So, issues around maintenance, around the kind of property, issues, anything around, furnishing or light or heating or water, all of it is managed. The rent is paid on time. It is in the professional landlords or institutional landlords' interests for the experience to be good, because then you have, the housing, the portfolio that they have is always occupied, right? More renters want it, so you can charge, a fair price on rent, but you can also constantly have occupancy, right? So that's something that we're observing. Like even through COVID, our portfolios were operating at 98, 99% occupancy across multiple countries. So I think that's something that's been quite like, it's counterintuitive, right? You think like, hey, maybe if I save more money, I can actually generate good returns. But the reality is, if you provide a better experience, you're able to get much higher returns in the longer term as well.
And so, who would be your target customers when you say investors? What kind of investor profile are we talking about?
Yeah. So look, the reality is, um, you cannot, you want to be able to work with investors that have that are part and want to be part of what I call the social fabric, which means they have an interest to create, from an ESG perspective, a sustainable investment. They want to be able to create a good social community experience. They want to have good standards, right, when it comes to governance and so on. So I think we work with the largest of institutions like pension funds, insurance companies, large asset managers that have very strict standards around some of these things. The reason why that's important is you could work with smaller pools of capital that might actually be aggressive, and they might move fast, but they require very, very high returns. And because they require very, very high returns, it's very hard for you to deliver a good experience for the customer, because the primary objective is profits, right? Or trying to extract most value, financial value, not just social value or environmental value. So I think it's really about making sure you have the right partners as well, because there's a lot of that kind of capital actually in the current environment.
Got it. I would also like to know a little bit more about the platform and the product offerings that Immo provides.
Sure. So again, as I said, if you think about Immo as a full stack asset management, towards the clients, towards the investors, they could literally come to us and say, hey, we would like to deploy 500 million in German residential over the next 18 months. Can you help us out? This is our thesis. So we basically have a almost like a B2B product there, which allows them to take a look at the market, understand where the returns are coming from, simulate some portfolios, be able to get access to, according to their strategy, get access to curated portfolios as well. And once they say, hey, you know what, this makes sense, then we start the entire acquisition journey. So what we do is we have tens of thousands of properties which we have access to from all kinds of offline and online channels, including our own website, where customers are trying to sell their home, right? So it could be in the UK, for example, including platforms like Zoopla, Rightmove, On the Market, and so on as well. It covers all platforms, offline and online. And from that, we're able to reduce down to the number of assets that are fitting the criteria in the right locations, and we have at the right price points, and we know we can rent them out at good returns without them being unreasonable returns as well. So all of that happens, through data, through the technology, and with that, we're able to then get a short list. From that point on, basically the inspection happens. We do it through an app, so the customer also can see that, hey, you know what, the inspector is going through the property in a structured professional manner. We give an offer on the spot because the underwriting is happening automatically as well. So once you give the offer, then you do a final technical due diligence. You purchase the asset, you fix the asset, means you renovate it, and then you rent it out, right? So there is, there's almost four big chunks of platform. One is the client facing um, investment module, or I would almost call it the capital and market intelligence module. And then the second module that they have is access to the whole investment management. Once they've actually deployed the money, how is the management of the money? What's the returns looking like, and so on. So that's the two for the client side. And then you have for the actual end customer, right, the resident, you have the ability for them to manage all of the things around their living through a single app that gives them access to case management, tenancy setup, onboarding, furnishing, services, all of that. That's also in part of the entire resident experience as well. And then we have the other piece, which is the whole backbone of the stack, which allows us to do all of these operations in a very efficient manner at scale with very, very few people.
Got it. For investors, their incentive is the ROI, right? So what are the yields based on what their investment thesis is? Do you offer them certain guarantees on what kind of yield will they be getting during the tenure of holding the properties, or how does it work out? What are the expectations between you and the investors?
Yeah, of course. No, that's great. So we are not an investment house, right? So we actually don't, we present data. So we have all the data on the market. We can read across Europe, right? Where's the returns and what kind of growth you can expect, and where the opportunities will be biggest. So we provide all of that primary research to them as well. And then what they then have to take a call on is, hey, does that make sense? Shall we go ahead, right? And let's build a portfolio according to this. We basically then execute on that investment thesis, right? We don't say it's our thesis, it's your thesis, but we execute on the thesis. So we're basically a service provider. We're a platform in between an investor and single unit stock, because today it's impossible for a large investor, right, who wants to deploy a billion or whatever, 500 million even a year, to find residential units. It's very, very hard, because you can only get access to maybe a portfolio that comes on the market, right, for 30, 40, 50 million, or a block, a building that comes up. Single units, which is 99% of the housing stock, is almost impossible for them to access. So the only way for them to do that is through Immo. So we kind of provide them we manage all of it. So it's, as I said, full stack. We do the acquisitions to management, all of it, but we do it on behalf of the investors. All of it goes into their vehicle, their company, their SPV.
Got it. Just curious if there are other players also solving the same around Europe.
So funny thing. I mean, in Europe, there is nobody that, to be honest, exists at. And I mean, of course, there's are there people interested? Yes, but nobody's really working with institutions at all. There are a few players doing kind of consumer or retail only kind of investing options, and people that do also all this fractional selling of portfolios, like they do that with retail consumers. In the US, however, there's been since the GFC, right, 2008, there was actually a huge, as you know, the great financial crisis. There was a big housing crash. It was also driven by housing credit. So there was tens of thousands of homes that were on the market for relatively affordable prices or very cheap prices because people defaulted. So obviously it was a very difficult time, but that was an opportunity for Blackstone to come in and kind of create what is called invitation homes. So that was one of the more traditional players in this space since 2008. So it's actually been almost 10 to 15 years. And there's been a few players like that in the US where they are doing SFR investing, but that is mostly traditional approach. There's no tech player globally. There is no SFR player, tech or non-tech. In Europe, we're the only platform that's able to do that.
Got it. And what is your role in particular as a COO? Because I've never been able to define a role of a COO. What's your role in it?
Very good. No, I like that. So, I mean, in very simple terms, if you think about So in tech, so I'm the CEO, right? So I like to think of myself as the chief builder, right? A large part of building tech companies is at 0 to 1, right? Something doesn't exist, and then you have to build it up. So whether it's functions, whether it's markets, whether it is organizations, right? You're kind of building all of it up. So that's kind of what I do the most of, if I would be honest. Um, Obviously, from a founder perspective, I look at the company directions, the big decisions that need to be taken, the what strategy A versus strategy B, market A versus market B. I look after the organization, which is the people. Obviously, work with the board, and help with fundraising efforts as a founder as well. Now, when it comes to the chief operating officer, which is what you asked about, look, the reality is, in a very simplistic way, the CEO is external facing, so they need to spend a lot more time externally, and COO is internal. They spend a lot more time internally facing. So it's almost like foreign minister and internal affairs minister, if you will, right, or home minister. That's how I like to define the difference. So I look at the company, while my co-founder CEO looks externally, towards the markets and venture investors and real estate investors and so on.
Just curious, just to unpack that a little more. Not intended to ask, but I'm talking to a COO after a long time. How do you divide your tasks between the CEO and you, so that you do not overlap or do not run into each other's work? How do you do that?
I think number one, and when it's a more established company, the roles are very clear. It tends to become more about operations, right? So which is the actual running of the business. In a tech company, and as you're in, and you mentioned, are we a startup? 100% we're a startup. Like, even even if we are hopefully IPOing one day, I'd say the same thing. The mindset has to be startup. But the way to divide this, honestly, in a tech company is, as I said, internal versus external. We The most critical thing here is communication. We need to have what I call the shared brain space. So if I'm not in the room, I can represent my co-founder's opinion, and vice versa. I think that's very, very critical. So there's a level of trust and dependency almost, that is absolutely critical. The other thing that you need to make sure is you're dividing topics. So if I'm looking after operations and people, I'm starting to build out on technology. I'm starting to help and build out on marketing. Those topics tend to be important. So you agree on the topics. And then if my co-founder CEO is looking at venture capital, looking at real estate capital, they're looking after finance. That's kind of how you divide the topics. So broadly, it's important to make sure the topics are clear. So if a decision is being taken, of course, we are always talking. So it's very unusual that we are on very different pages. But if a decision needs to be taken about a particular topic, it's the person's topic, so they kind of have the veto on it, right? So that's a way to make sure you don't step on each other's toes. But I would be lying if I said it's all rosy and dandy. It's not. You kind of run into these situations where you kind of have to do what I call almost getting to zero, where you say, hey, you know what, we had this problem, we had this misunderstanding, we need to talk about it. So we would spend like an hour just unloading and sharing. And it's very, very, it's almost like a CEO and COO is almost like a marriage, in my opinion. Like, it's so tight because you're almost codependent on each other. You need to make sure that you have each other's back. You need to make sure that you understand the other person's perspective. Like, ego can never get in the way. It often does as well, right? So you need to make sure you're always clearing the air. So that's kind of how I view the way to split between the two roles.
Just curious, does the CEO have the veto rights on all topics where there is a deadlock?
I mean, technically, yeah, 100%, right? 100%. And I think that needs to be very, very clear, right? What you don't want is for the most you will often have come across topics that nobody can solve, right? And there's no perfect answer to, and that's where the CEO kind of steps in and decides. So 100%. But usually, 9 out of 10 times, because it's a particular topic, right? Could be operations, could be people, could be marketing, could be technology, which I'm overseeing in some ways. I would tend to be a bit more involved in or my opinion would probably be the one that we go ahead with. But it's very very it is the right thing for the company that there's one person who's finally accountable if there's a deadlock.
Did you know the CEO beforehand, or was it something that they chanced upon your profile and then you got together and started this?
Good question. And personally, so I invest a lot, right? So personally, for me, it's very important the relationship of founders. Like
Yes.
in our case, there was so in one of my previous companies, Cast 24. There was an investor that I knew, and he was part of the company's journey, and so that's been 10-year relationship, give or take. He was very close friends with my co-founder. They're both German. They're part of the same ecosystem. They've done not exactly deals together, but they know. They have been part of similar companies as well in terms of investing. So I think there was we kind of met like a year or whatever, 8 months before we actually started working together. And I was still in India at the time, building Disney Plus, Hotstar. And we kind of, we realized, hey, you know what, maybe there's a way to do something. I looked at him and said, hey, can you get real estate capital? He's like, yeah, we can. And he asked me, can you make sure we can buy properties and rent them? I'm like, yeah, sure, we can. So that's kind of how it said, it started to, jam together a lot, and it started to make sense. And that's when a third co-founder also kind of came in, we spent like almost 8 months before I actually moved over to build
Nice.
this with them.
Nice. Thank you. Now that we know what Immo is, how's the future shaping? What is on the roadmap for the next 1 or 2 years? What's the vision like?
Yeah, 100%. Look, I think it's actually very fairly straightforward. So we have like three big things to solve here. Number one, I think we've proven ourselves in Germany, in Spain to an extent, and maybe a small way in the UK. So we want to expand on that. So we will be looking to deploy close to $1 billion in real estate capital within these markets in the next 1 to 2 years. I would say 18 months to 24 months. I think that's key. There is no such thing as the only success is actually doing it and proving it. The track record is a very big part of what we do. So that's going to be critical, number one. Number two, as I said, we need to be able to build the full asset management platform. The technology behind it, the data behind it needs to be there. And I think we are 50% of the way there. And there's a lot that we need to do. We don't need to be building every single component ourselves. Now, obviously, you run a PropTech podcast as well, and I'm sure you're part of the industry as well. So there is so many of these amazing companies out there that are solving parts of the problem already, right? So whether it's rent collection, whether it's deposits, whether it is data around sourcing or intelligence, whether it is project management for renovations, right? There's so many companies solving pieces of the problem already, and I think we are obviously full stack, so we don't need to build everything. We just need to have the infrastructure to be able to plug them at the right time. So I think we will be looking at ensuring that the full asset management platform is set up, and that is very, very key. And the good news is there's a lot of exciting companies out there that we can partner with, collaborate, explore M&A and so on. So that's something we'll be doing as well. The third piece, which you'll hear a lot of from tech companies in the current environment, at least over the last 6 months to 12 months, is we want to make sure our unit economics are positive. We break even. We're already starting to break even, or we have plans in the next couple of months to break even on a country level, on an operating market level, which is called operational break even. But I want to really get to company level break even over the next year or two. And I think that we know the path, we know how to get there. As we are deploying fast, the model is very attractive. We scale very, very quickly in terms of revenues. So we know that if we're deploying fast enough as well, it starts to kick in. We know that we built the technology to scale. So we don't need, if we are growing 10x volume, we don't need, 2x, or, we need probably 2x the number of people. So we know all of that, but getting to positive unit economics and break even is going to be key for us in the next 1 to 2 years.
So since you are also responsible for fundraising And you mentioned about the current economic circumstances and how the investors are looking for operational efficiency and positive unit economics. Where do you see this heading? Do you see that the investors will continue to remain conservative for a few more quarters, or this is going to be till next year, or this is going to be a story forever? Where do you see it, where investors will be back to free hand and scale up and cash burning and stuff like that?
So again, it's the billion-dollar question. So I would be lying if I had a crystal ball to give you the perfect answer here. But just to split out, when you say investors, so there's venture investors, right, the VCs, and then you obviously have the real estate capital, real estate investors as well. I think on the venture side, venture tends to be a little bit more, tends to bounce back faster. But you still need it's also very momentum driven. So when you start to see the first investors starting to deploy tickets, the rest will also start to follow. That's typically momentum driven. We also know that the cost of debt or cost of capital to them is quite high, so they need to put it to work. We also know that there's quite a bit of dry powder in the category in the VC space.
What,
But
what
what I'm seeing here is, yeah.
Avi, what do you mean by dry powder? Sorry, I didn't get that.
Okay,
I don't.
sorry. So, sorry, my bad. So, people have raised a lot of funds,
Mhm.
right? So, VCs have raised a lot of funds over the last year or two, and I don't think we will get back to 2021 days, at least for the next few years. But there is, the funds have been raised. There's a commitment and there's a timeline on the deployment of those funds as well, in order for them to start generating returns. So there's usually a year or two of window of deployment, and then there's a couple of years where they have to prove the actual returns back to their LPs, the people they raise the money from. There's a time limit on this. So last 6 months have been obviously interest rates, blah blah blah, markets, and everything has kind of gone in a bad way. But I think people have come back in 2023 a little bit more optimistic. I think there's been a bit more optimism around, hey, you know what, business needs to happen. We need to find the right companies. They're being a lot more diligent. So they're being a lot more, I would say, it's very important for them to prove, as I said, unit economics, very important to make sure the model is big enough, very important to make sure that the founders know how to execute well. So the bar has gone up a little bit, valuations have come down a little bit, but activity is starting to come around. It is coming around more for early stage, so that's also something that I'm seeing a lot more. So seed stage, angel, series A, there's a lot more activity than growth stage, for good reason, right? At growth stage, if you're a, I don't know, series D or series E company, you're typically aiming for an IPO. The IPO market is pretty frozen. I mean, this is not the right time to do a tech IPO. So that's kind of why you have a knock-on effect to Series C, Series D, and Series B as well to an extent. So I think that's on the venture side. I mean, real estate side is probably it's its own podcast, because there's a lot going on there. Investment strategies are changing. 2022 was a bit of a write-off. 2023, there is optimism. Debt rates, interest rates have a massive impact on that category. So the kind of investors coming in are also changing. Anyway, we can talk about that, but I mean, venture, I think is probably more easy to explain. I think as momentum starts to build in on early stage and start to get into growth stage, people will have to deploy. I think the market will turn around in the next couple of quarters. It won't go back. I don't expect it to go back to 2020, 2021 days. I actually think it's great.
It's good. It's good. Yeah.
I think it's great. I mean,
discipline. Yeah.
As a founder, it's odd for me to say this, but I think it's great. I think there's going to be a lot more discipline, as you said. There's going to be a lot more accountability. People will be building real businesses, right, that can actually make money, as opposed to the promise of it in 10 years' time, right? So I think that's it's absolutely the right thing to do. And we've seen some models that got inflated over the last couple of years that were in the real estate space. iBuying for one, and so on, which really have struggled with this shift in the market, and for good reason, right? Because it's very hard to justify consistent revenues in that model, given it's an arbitrage play on pricing that kind of evens out at some point. So anyway, so I don't want to go into that, but I think, look, there's some turnaround definitely coming, but it's not going to be 2020, 2021 anytime soon.
So what's the difference between venture money and real estate capital?
Okay. So the way to think about it is if you imagine a curve, risk reward curve, and this is how investors think about money, and this is how actually even individuals we should think about money is how do you diversify your portfolio. On the bottom left side is basically the most low risk and low return kind of investments.
Mhm.
So it would be government bonds, it would be fixed deposits, it would be stuff that is really low risk, corporate bonds as well. Real estate actually from a risk point of view falls somewhere here, right? Not at the extreme end, but somewhere here on the risk profile. And then on the other end of the spectrum, right, I'll probably go to the extreme end would be crypto and really I would almost say speculative investing, right? So, I'm going to get 10x the money in 3 years' time, right? So, highly speculative investing. Equities tends to be, somewhere in the middle, which is stock market. But venture tends to be above that, right? So, venture is expecting maybe 20-25% returns on an annualized basis.
Right.
Real estate, you might be expecting 12 to 15% returns on an annualized basis. But that's kind of the spectrum. So if you understand, because the risk reward profile is so different, the kinds of investors going after it are also different, right? So as I said, real estate, you typically have more conservative investors, people who want to, pension funds that want to make sure there is money at the end of the term when the person retires. They need to be able to give back the money, so they need to generate consistent income. They need lower risk. That's the kind of investor that would invest more into real estate. That's kind of what we see. And on venture side, the kind of investors can be different. Sometimes it could be the same investor but different pools of capital within those investors, so they diversify between low risk and high risk investments. So sorry, didn't want to convert this into a bit of a finance conversation, but just to explain that in a bit more detail.
Excellent. Thank you so much. My next question was on the evolution of the space in the coming years. So, where do you see more funds getting into? Where do you see more disruption happening? Where do you see more startups capturing attention? So maybe some light on that would be helpful.
Great. No, no, of course. Look, I think there's a few big themes which is agnostic to category. I actually don't even think that's property related. The few big themes that I think are very obvious to everybody, unless you've been living under a rock, are going to be climate tech. So climate tech is big. It's massive. The other side of it, to explain that for property, is ESG. Right? It's a big agenda. It's very clear that the goals for as I said, even in large investors, but also for countries, it is important for consumers. So that is one big thing that I think, in general, is so if you don't have an ESG play in your product, if you don't have a climate angle, like we do, right? So as they say, right, the greenest building is the one that already exists, right? It's kind of what we do, right? The stock exists, we just retrofit it and make it better. So climate tech is one big theme. The other big theme, which obviously we're all aware of, which has been happening for a while now, is fintech. Continues to be extremely important. I think there is a play, like what Immo is sort of also doing, is thinking of real estate from a point of view of a financial product, right? Not just a physical product, but a financial product. So companies that are starting to get into that and are able to unlock that value, because it's also a very there's a lot of revenue streams that can come out of it. So I think that's the other big play that's happening. The third big play, as I'm sure you're also aware of, is the whole data play and artificial intelligence on top of that. I mean, I don't need to talk about ChatGPT to any of you in terms of the entire ripples it sent across the world. But I think, look, that's one application of what we call generative AI. But that's the other thing that will start to come in as well. Now, when it comes to specifically real estate, I think there's a few trends. Big data, as I said, obviously, there's also quite a bit of focus on smart and energy efficient kind of buildings and stock that I think we'll see even a lot more of. There's a lot of flexible use of space. I mean, COVID obviously had a huge impact on how people work, where people work. I mean, a lot of work was happening from home, but homes are not really designed to accommodate for working environments, and flexible use of working office space as well. Like, how do you do leasing between different companies, right? There's a lot of interesting stuff happening there. Warehousing had a huge shift in COVID era as well, supply chain, and so on. So I think space management is the other thing that's really happening now. In terms of principles, if you're building a company, like, my opinion would be, there is quite a move towards platform plays. Like, I mean, again, I don't want to use Immo as the only example here, but in general, if you are building more of a platform play as opposed to just solving one small piece of it, I would really think again, because I think there is integration that's happening. If you're part of the integration, then you have a bigger story, as opposed to then you're solving a sliver of the problem. So that's one. The other thing that's happening is, this category, similar to other categories like e-commerce, is moving towards transaction a lot more. So if you're closer to the transaction, if you're not just helping a customer discover something, but you're actually helping with the transaction, you'll be able to generate more value. So those are the few trends that I see are happening in the prop tech. First of all, overall tech space, then prop tech space, and the last one more specifically for how would I be building a company right now.
Excellent. Thank you. Let's shift gears a bit. And this is also my exciting part, because I saw you have a string of portfolio startups in your kitty. So it means that you're very active investor in lots of startups. I always ask anybody who is angel and has a good portfolio that there is some thought to the chaos. What are your core investment philosophies before you decide whether or not you invest in startups?
Yeah, sure. No, of course. Look, I would be lying if I said, like, if I have like a long checklist and super well designed approach to investing. I don't. I believe the most important thing, literally, for me is the problem big enough, right? And it keeps going back to Immo, keeps going back to any of the companies that I've built before. If the problem is big enough, I think that is literally the most important starting point. And many founders and companies that they come my way and I review them, and many times I say no. And one of the big reasons I say no is, a lot of the time they have a solution in mind already. Right? They said, hey, I can code, let me build something, and it's so super interesting, super sexy. Now let me figure out where to apply it, right? And look, I mean, a lot of people are proponents of blockchain, so I don't want to go there, but there are sometimes technologies that come before the application is clear, right? So I would really urge people to go back to the problem statement. If you are someone who has faced the problem themselves, it's the best possible reason to solve it, because you don't need to have 100 consumer research to actually figure out what really the nuances of the problem are. If you don't, I would say you have to spend a lot of time really substantiating whether it's a real problem, or is it a problem that you're trying to tell yourself because you already have a solution in mind, right? So that's one big thing for me. I really, I call it the SISP, which is solution in search of a problem, right? Don't do that, right? So be very clear, problem first, always. The second thing for me is honestly, because I'm early stage, I don't do like late stage. For me, it's seed or Series A kind of timings. It all goes back to the founders. It all goes back to the founders. If the problem is clear to the founder, if I believe they have clarity of thought in terms of what the real issues are, what the gap in the market is, how are they going to make the money, are they execution focused, or are they just descriptive, right? So very critical to understand that about the founder. So for me, that's the second big very, very important thing to consider. The third thing, as I said before, like, I mean, and we know this through data, hopefully everybody does, but there's a lot of research on product market fit, right? Is this product before its time? Is it right at the cusp of the wave, or is it too late, so there's too many players, or is it too early? in which case it is, just going to be, it's a long haul for 10 years to get there, right? Like the food tech company I was talking about, it was way too early. So the product market fit for me is very, very key. It actually has the biggest impact on success of a company. Yeah, of course, founder, of course, problem statement, but product market fit is absolutely key. The last thing I care a lot about is there an unfair advantage that you have in the company? So the unfair advantage could come through technology, in which the way you're disrupting the category. It could come through just the rate of growth of the market. So the specific market you're operating in is going at 25% CAGR. I mean, that is a market to consider. Whether you have a specific expertise as a founder, maybe you've done a PhD on a topic, or you've worked in a certain sector long enough to really understand the insights there. So that's an unfair advantage, I call it. Those are four ways, or almost my small checklist in judging whether this is a startup that I would like to invest in. In general, I'm very agnostic, so I'm not only category dependent, but I really look at B2C, which is selling to consumers, but also C2B, where the consumer is kind of the business is buying from the consumer as well. So those are models that interest me a lot more.
Do you have any favorite picks in your kitty that you are very excited about? Do you want to
It's like children, right? So how do you choose your favorite one? No, look, I think there's some incredible founders out there. So I have a couple in the US, a few in the UK, a few in India. I'm not too there's a few interesting themes there. There's there's themes around learning and development, and how can you really convert that into a scalable play for organizations. There's a play around mental health that I'm personally very excited about backing as well in the US. There's plays around again health, but being able to build a holistic approach to lifestyle disease management and so on. So very, very interesting kind of plays there that I'm excited about. So look, as I said, I'm not really something in that I'm backing also in fintech, which is more to do with personal investing. So there's a few different plays. I don't want to share a pick here, because as I said, how do you choose your favorite child?
Yeah, fair enough. Any investments on the PropTech side? Have you made any?
PropTech, I have. So I've actually evaluated quite a few. I think one of the key, and I'm actually right now looking at something very actively. So it might change in a week's time if we discuss again. I think one of the key things I'm interested to help or as I said, nurture within PropTech is integrative platforms, and I think there is somebody who's trying to do that towards consumers, and they're trying to build like an ability for them to do deposit management, insurance management, all of that in one place, which is obviously quite a major pain for consumers. So that's one platform that I'm interested in looking at. I'm looking at quite actively. But right now, as I said, I'm quite category agnostic. If you're a prop tech founder who has an exciting idea, would really, really love to talk to you. I'm very keen to obviously help develop the ecosystem more and more and more.
So when you say talk to you, do you believe in cold emails, or how do potential startup founders reach you?
No, that's a great question. I mean, not just for me, but in general, I think one of the best ways to reach to any angel or any investor, venture investor, is, in my opinion, there's two ways are the best. So, the warmer the better, right? The introduction, the warmer the better. If you can find like a common contact on LinkedIn with the target VC, you reach out to them and then they introduce. That tends to work really, really well. I think the other way is I've actually found LinkedIn in general to be very powerful, right? I mean, all of my contacts, including yourself, Ravi, emerged through LinkedIn. So I mean, don't be shy, but give them a very good reason why they should have a conversation with you. And sometimes it is about following up. I do think cold emails, if I'm very honest, don't work. So again, unless you're selling like an enterprise product or whatever, so B2B product, and you just need to spam a lot of them. Um, I'm personally not a big fan of that. But try LinkedIn, find a way for a reason for them to be interested in this thing, find some connection, work that they have done that might correlate with this. Like, I mean, find a common ground. I mean, that's what I say. If you can find a common ground, then you might have a slightly higher chance of a response. But the best way would be a warm introduction through somebody in your, let's say you have a second degree connection, you find a first degree that has them as the first degree. That is literally the best way to do it. Or yeah, I mean, same thing in the real world, right? So you have a person who knows the person, like talk to that friend, right? And they will make the intro. So that tends to work well with investors, in my opinion, or in my experience. And that's really, I don't know if that's an efficient model, right? I don't think it's an efficient model for venture either, because it closes them off to sometimes really strong companies. But that's the reality today, right? So something for all of us to know.
I realized that though the venture funding has dried up these days, people are very keen to do early rounds. So there is a lot of
Yeah.
pre-seed funding that is happening. Am I right with this
Yeah,
observation?
exactly. That's kind of what I was saying earlier as well, right? So the money is there; it has to deploy. People are waiting and watching, so it's not like it's all flowing right now. But the trickles have started, but all those trickles are going more into the early stage. So angel seed, Series A, you are seeing companies starting to come up in that space. But which means if you're a founder that's looking to start something. There's never a bad time and never a good time. You are taking irrational risk. That is for sure. And that's for sure. Like building a tech company, like 9 out of 10 will fail, right? So there is irrational risk in there, but I do think early stage is not suffering as much as growth stage. It is down. It is definitely down, but it's not suffering as much. If you wait 6 months, I think market will open up a little bit more. But again, if you have an idea, if it makes sense, I mean, if you can see traction, if you can prove it a little bit, there is a lot more. There is capital out there.
Got it. Excellent. I have a bonus question before I let you
Okay.
go. The bonus question. I had not spoken about this to you, but I felt like asking because you have had an incredible career. I just wanted to know what have been your personal habits as a business leader that helps you stay in top of your game. Like, having this conversation itself reveals a lot about how curious you are, how relevant you are with the industry. You mentioned about generative AI and stuff like that. So that means you are in the know. What has been some of your personal habits that you think has contributed to your career?
Okay, no, great question. I mean, first of all, I don't know if it's successful. I only see the stuff that I believe you need to do more of, right? That's maybe part of the answer as well. I think, look, and somebody asked me the other day, like, how do you measure success? I'm like, I don't. Like, I only measure, areas of improvement, right? And how do we actually, and not on a personal level. I think on a personal level, you cannot be that harsh on yourself. Look, so just a few things. So number one, I think is self-realization, introspection. Very interestingly, I think that tends to be your superpower. If you really, really know what you are incredible at, I really believe that's something for people to hone in on. If they don't know it, ask people around you, like, what do you think I'm really good at? So I found that to be very powerful, because then what you do is you end up partnering with people, whether it's your co-founders or your team, that are complementary of that skill set, right? So where your gaps are, they can fill in. And I think that's super key. And I've often found, places where people don't realize that is where, things blow up, right? If it's not now, maybe in 2 years' time. So I think that's key. That's been key for me. The second thing you touched upon also is there's I'm curious. Like, I really just want to learn. I want to grow. I want to improve myself constantly. And I think just having that mindset of, what, I don't know a certain topic, or as I said, move to Japan and then move to the UK to build something. I don't know the category. Let me solve it, because the problem is big enough. So I think that curiosity is quite key, or has been helpful for me personally. The third thing I found important as a leader is, and this is often understated, or I think there should be more dialogue around this, is empathy. I think one of the most important things for us in building Immo, and in almost creating what is a counterculture to typical what tech companies or finance companies are known for, was very important, because we wanted to make a place which created a magnetic culture. Like, people literally would be reaching out. Like, one job application would attract 400 applications, right? One job would attract 400 applications. Like, we've seen that. And the reason why I think we also were able to create that was because we treated people in the same way we would like to treat ourselves, right? And I think empathy goes such a long way in taking the right business decisions as well. You talked about Bob Iger as well. I mean, really a big fan of him. And I think we call it compassionate leadership, right? I think that's absolutely key. The last thing, in my opinion, which goes above everything as a in terms of a measure of success, would be to be very execution focused, right? I think the best founders I've found, the best leaders in tech, tend to be those that actually know how to break down a problem into its base core and then execute that piece. And then if you execute all the pieces, you actually end up solving the bigger problem. So I think the execution focus is absolutely vital. And that's something that, if I had to say, like, has helped me a little bit along the way.
Got it. I would like to ask you to be a little more tangible. Like you mentioned about curious to learn. Like, do you subscribe to a few business magazines that you read to, so that you're relevant? What are some of your learning
I'm,
and reading habits?
I'm
Do you read?
honestly, I'm reading all the time. I used to be able to read a lot more books than I do right now. So I feel a little bit like there's almost the pressure building up where I'm going to take a month off and just read. But look, obviously hard to do that in tech when you're building tech company. But I tend to stay in touch with, because I have I'm part of certain groups which we meet up and we talk and we really kind of exchange information. So that's with other founders and people in the tech space, VCs and so on. So I tend to spend a bit of time doing that. I also use some of these apps. So I have, like, interestingly, if you train it enough, like Apple News, it tends to then serve up relevant information. LinkedIn has become a big source of information. Interestingly, it used to be purely networking, and now it's kind of moving more towards Facebook. In some ways, there's a lot of information out there, but I think, at least for now, it is still serving up a lot of relevant stuff for me. I'm part of a lot of these publications and newsletters as well, of course, from the industry, in the tech space. Like, there's like 5 or 6 newsletters that I constantly get information from. So I do make a point to read all of them whenever I can. But again, given the constraints of all of us are super busy, I like to consume information that is more readily accessible and on the go. When I need to do reading, I probably do it when I'm on holiday or on leave, when I have, like, a week off and so on. I do a lot of reading then. But in general, I think you need to find your ways of staying relevant and staying in touch. And those are the 4 ways that I use as of now.
The lesson that I learned from you is you have curated your environment in a way that you can't help but learn through osmosis of, or absorbing information. So you've curated your news field, you've curated your groups that you're part of. What about your peer groups? Like,
Yeah.
do you spend time, like, have you created, like, people who are competent in your field or around you? Do you meet up? Like, I know for founders that they have other founders that they meet. How do you do you have a peer group of that sort?
Yeah, I mean, 100%, right? 100%. I think I could do more there. I do believe, I obviously, in a way, lucky that we have 3 co-founders here, right? As part of founders, as part of Immo, so that helps a lot. Like, there's a lot of constant dialogue there. I think the VC space has, by virtue of working with them, you tend to build relationships. So you kind of meet up for coffees and chats, like, every now and then, and that's, I think, quite good. Sorry. The other network that I think, fortunately, I had also was part of my college, right? So IIT, we kind of have a fairly strong network. So I do believe it's quite fortunate for me to have that, also in London and pretty much the rest of the world. So I stay in touch with them and kind of make sure I can exchange thoughts and or meetups and so on. I can't do enough because I also have a young baby, but I think I used to do a lot more maybe a few years ago. But I know that as the kids start to grow, I'll probably do a lot more physical interactions as well. But yeah, there is a peer group that I formed. Part of it is through design, part of it is through just by virtue of circumstance.
Got it. Since I had asked for like 5 more minutes of your time, you mentioned about introspection and self awareness. Without being modest, what do you think are your superpowers that you know that you're good at? Or maybe I ask your peers, they would say that yes, this is Avi's superpowers.
Um, okay. I mean, look, you're absolutely right in asking me that because I raised the point. So the first thing, as I mentioned, I think there is I'm really good at highly ambiguous, highly complex environments. I think I thrive in that. I love that. I mean, the bigger the challenge, the better for me, honestly. The more complex the topic, the better for me. So I really enjoy that. So that for me is one, like breaking down really complex things into simple, understandable things. The second is I think I'm very execution focused. I'm very action focused. I'm very driven by impact. And in some ways, I believe I'm able to mobilize companies into a certain direction, right? So not just myself, but also I'm able to mobilize companies in a certain direction, and that's something that people often mention. I'm able to do. The last thing I do think is, and this is the last one, actually I've worked on it a lot, right? In many ways I was not good at this at all, maybe a few years
Good,
ago.
good at what? Influence.
No, no, no. The last one, which is empathy.
Okay.
I mean, I of course had empathy in a superficial sense, right? But really being able to understand what's going on in somebody's life, really being able to understand what is the motivation and the triggers for them, really being able to put myself in their shoes. I don't think I've done that as much in the past, and that's kind of part of the issue, right? I mean, in tech and also in the education sector, right? You don't really spend enough time on learning about how to be empathetic and what's the right way to do that. So I actually think everybody's innately good. Everybody wants to do good. I just think that we need to bring it out more and talk about it more and be more compassionate, be more empathetic, be more giving, and be more collaborative, because that's the way to really build the ecosystem, right? I mean, if one person makes 100, whatever, 100 million versus 10 people making 10 million. I actually like the latter more. I'm actually excited about having, like, sharing wealth with people that are building the company together with me. Like, it's a big part of our ethos is ensuring everybody comes along, right? That's been something I've also, I knew it was there, but it's something that I put into business practice. It was there in personal life, but not in professional life. That's something I had to work on a little bit more.
Excellent. Well, this brings us to the end of a fascinating conversation with Avi. I don't think I've enjoyed a conversation like this in a long time. So, compliments to you, Avi.
No, no.
Usually,
You
I'm
asked
greedy.
amazing questions, Ravi, and you've got me thinking as well quite a bit. So I really like that. Thank you.
I am very greedy. Whenever I bump into a guest, I ask some bonus questions like the last one, because I really felt that you will have a lot of meatier answers there. So, thank you for
Thank you.
for answering them, and thanks a lot for taking time out. It was well worth the wait all this while. So it all led to this nice conversation, insightful conversation. So thank you again, Avi.
Amazing. Thank you so much for having me, Ravi. This was great. Lovely
See
being
you
here.
around. Bye bye.